Well, you know, if it's Friday, it is the About Mansfield Consumer Advice Series. This is now number 3 that we're doing today, 3 of 3. And today we are talking about your taxes because February, it's tax time. And we're going to bring in our guest here, Adam Coen. As always, bring you back. Welcome back to About Mansfield.
Thank you, Steve. Glad to be here. Happy Friday.
It is Friday, but more importantly, we are only 3 days away from Valentine's Day. Are you prepared?
No, I actually forgot about it until
Well,
today.
you and me both.
Yeah.
I did go into my local grocery store over the weekend, actually yesterday, and the flower department, the floral department, is just loaded not only with roses and stuff like this, but the mylar balloons were all over the place.
Really? Those are still popular?
I guess I don't know.
Hmm.
I don't think I've ever given balloons as a Valentine's gift.
Nor have I. I don't know that I would want to.
But we're not here today to talk about Valentine's Day.
No.
Today's topic: tax records and document retention.
Sure.
Now, Adam, I don't want to say that I'm a hoarder, but I do tend to hang on to my tax records, because I don't know how long I should be hanging on to these tax records. So let's jump right into it. How long should I keep copies of my tax returns?
Listen, I want to tell you very quickly, there's someone very dear to me who I love who will remain nameless, who recently sent me pictures of tax records from 1988.
Wow.
So, yeah, you don't need to keep them that long. At least keep copies of your tax returns for the prior 7 years. And if you want to keep them longer than that, the reasons you might do that are, let's say you were audited for that year, or you took a deduction that you thought maybe was risky, let's say. Those you'd want to hang on to perhaps a little longer, but generally, 7 years is it. You don't need to keep them any longer than that.
So if you did take a risky tax deduction, can the
Mhm.
IRS go back and audit that tax deduction, say from 10 years ago?
Not generally that far back, not unless there's fraud.
Okay.
You've got three time periods to deal with: 3 years, which is going to be most people, 3 years from the time the tax return was filed, 6 years, which is going to be some of those risky items you're talking about. And then, of course, there's tax fraud, which there's no time frame, in which case you've got a whole nother set of issues. You don't come see me, you go find a tax lawyer. Yeah.
Okay. So tax returns, ideally 7 years. We're looking at what, 2014, 2015,
Yeah.
around
Around
there.
that time frame. Yeah.
All right. Now, I also have shoe boxes full of receipts and other tax documents. Same question. How long do I hang on to those tax preparation items?
Oh gosh. Well, it can depend, but your normal W-2 and things like that, again, generally 3 years. They're most of the time the IRS is not going to look at a normal tax return with normal deductions any longer than 3 years back. And for sake of argument, and practicality, they can't wait until the third year is about to lapse. They're going to go somewhere between 12 and 18 months is when you know that they're going to look at your tax return. So if you're past the 3 year mark, you don't need to keep any of those tax records. Now, if you have a small business where you've taken one of these risky tax deductions, you probably want to keep your records substantiating those numbers on that particular transaction. But the other items largely are not going to matter.
All right. So ideally, again, 7 years for tax returns,
Hmm.
3 years for receipts, W-2s, other tax preparation items.
Correct.
All right. So now I've got these shoe boxes full of receipts and things like that. I've got my stack of old returns from 1983 and to current. What's the best way to dispose of these 8-year-old and beyond tax returns?
Yeah, I'll tell you the main answer is don't bring them to your CPA. We don't want them.
Because you don't
Um,
want them.
yeah, shred them for sure. And I've heard some people say put them in the bonfire. I mean, shred them is really the way to go with it, and make sure it's a crosshatch shred so that it's really destroyed and none of your personal information is getting out there. Obviously, you're not concerned about somebody trying to figure out how much money you made in 1983. You're more concerned about, are they running off with your personally identifying information, date of birth, social security number, full legal name, etc.
Okay. And here in Mansfield, they have Shred Day,
Oh
where
yeah,
you just drive up with your box of papers. They dump it into, I guess, what looks like a wood chipper, and it all. I've never been to one, so I don't know what it actually looks like. But they dump it in, they shred it, and you walk off a happy person. You can actually stand there and watch them shred your documents. But
right.
Mansfield, 2-3 times a year has Shred Day. What kinds of records should I keep, and how do I go about keeping them?
So if you are a small business owner, you've got a whole lot more due diligence and record keeping requirement than somebody like um, a college student who has a couple of W-2 jobs and maybe an interest statement on their bank account. Well, who earns interest on their bank account anymore? But if you are a W-2 worker, an employee, you're just going to keep your W-2s. Any other tax forms you get from third parties, and keep those in your records in a file, and that's sufficient. Now, if you're a small business owner, you need to have receipts, bank statements, credit card statements, things to back up your purchases, your business expenses, and any of the information that you're ultimately claiming as a deduction on your tax return. It's incumbent upon you as the person reporting the deduction to have the records to back it up.
All right, now tell me, because we're in a digital world. Who keeps material copies of things? So, tell me if I'm doing the right thing. When I receive my tax return, which is usually a hard copy, first thing I do is I go to the scanner and I scan it and upload it to the cloud. So I've got it. I've got it there. Is keeping a digital copy, a PDF copy of your tax returns, is that advisable?
Absolutely, and the same thing with your records, your receipts, your bank statements. In fact, it's not only advisable, it's preferable, in that it be stored in at least two different places, one local, one backed up off-site. Because if something happens to your house, if it burns down, your records are gone. And this is the story that I hear time and again: tornado, fire, flood, records are gone, and now you've got to reconstruct. But if you've got it backed up and scanned in, not only do you not have receipts degrading, from where you went out and had a $1,200 meal with a bunch of potential clients, it's gonna fade within a couple of months, if not a year.
And then all of a
But
sudden, 1,200 looks like 120.
that's exactly right. And now you're stuck with a $120 deduction instead of 1,200, or whatever the case might be. Yeah.
If someone wanted more information about not only how to file or tax records or where to file their documentation, or how to retain their documentation, if someone had questions about taxes in general, how can people get in touch with Adam Coen?
Give me a call. I'm at 817-231-0666, and any one of us here can help you. Again, 817-231-0666, or you can go find us on the web. We're at DFW Tax Team. That's TEAM.com. And really, the question everybody needs to be asking themselves is not, is it deductible, but how can we make it deductible? What business do I have to be in order to deduct this?
That's good advice. That's Adam Coen with Jack Lauderman, CPA PC. He is the tax manager for Jack Lauderman. Happy Valentine's Day.
You as well, my friend.
Thank you. We'll see you on next Friday.
All right. See you then. Bye-bye.